This is going to be a really good highlight because a couple of things. When we came in this morning, it was a day that we're up 30 handles in the S&P, which means everybody's bullish. Everybody, and that's fine. You should be bullish. We're up a lot. We're up almost 1% overnight. Everybody's excited. So everybody and their dog is bullish. What you look for and what we talk about is look for the reversal, because what makes a reversal, in this case, bullish to bearish, is the fact that everybody's bullish and they're not getting paid. We rally a little bit, and then there was a collection of longs near the highs that I didn't have recorded, but that was this is the fade. And if it's not the grind and not the failure, and then we loaded up with people who are long and they weren't getting paid. That's the anatomy of a reversal from bullish to bearish. The fact that you have people who are bullish getting long on the way down and not getting paid, and it becomes a self-fulfilling prophecy. And we know that with our green bars that stick in here, these numbers became really big as we've seen them. And I use the word heavy. This market's still heavy. Be careful. In any moment, I said there could be a bottom. I said, but it's a temporary bottom. And it was. Something happened in here we talked about, and it rallies, gets tested. Something really happened well in here that I'm going to show that had the best chance to be more than a temporary bottom. And it wasn't a guess. It wasn't random. It's all about other people's positions and order flow and understanding how we filter this MBO data to find the intentions of other people's orders, therefore other people's positions. Couple things. We had our first red iceberg that happened down in here. We had longs that puked so much that it became the biggest puke of the session. That's an 8-hour. That's where most of the longs puke compared to any other point. Puke means get out of a long position. When there's people that get out of long positions, they're no longer trying to sell it, especially above. Less longs, less sellers, it's easier to go up. So that's a couple reasons why this had a chance to be a temporary bottom. Here's another reason, and let me fast forward it as I walk you through it. Take a look at this, the red iceberg that came in, the crossover from the iceberg, and then you could see the deteriorating longs, which you get when you see them puke, but you see less longs even trying to get in. But take a look at these reds that show up. Let me rewind it and then show it. Boom. See how they flick out? That's people short in the hole. That's a phrase that came from my floor days. Short in the hole means what? Just what it says. You're short, and it ended up being the low, or at least a temporary low, and we rallied out of it. This is the anatomy of what lows look like and why they look like it. Stop trying to read charts just by patterns or just by straight volume. Understand other people's positions. You get less longs and more shorts. What does that mean? What does less longs and more shorts mean? Less longs and more shorts. What does it mean? More shorts. It gets us to what? More shorts mean more buyers. Less longs mean less sellers. Isn't that kind of what you need to go up? What do you need for the price of anything to go up? More buyers and less sellers. Period. Cares the price of a house, a plane ticket, or the S&P E-mini futures. June contract. Point is, how do you get there? Well, you get there with less longs and more shorts. How do you see it? With the tool that we have that nobody else has. And it's the real-time analysis that matters with it. The notion that this strip of red getting above it squeezes the shorts, now they're stuck. So the shorts, when they start looking like this, is the chance you have to go up. Because they have been looking like that all morning, right? Short side's been the right side since the open. But when they start looking pissed off, and when you start getting shorts stuck in the hole and they take heat right away, it has the best chance when you combine it with the other things I just walked you through for the low to be the low. Let me take it from the beginning, from the top or the bottom. We go down, first red iceberg, longs puke. You reference it to the biggest puke of the session right up here. All these shorts get short, like little baby, I rewound it, little baby or little fifth graders who can't get out of losing trades. They just go crying to their mommies. They're all short, stuck. I circled that during the room. That's why it's on the recording. How that number was shrinking was what you want to see for continued upside. We even had a big seller come in, bam, and it kept shrinking the longs. And as we walked back as a head fake, I told people once we got above where he started, It's more bullishness, more above these red shorts, other people's positions. If you're not with us and you're not in our room, you're on our chart.